Happy Thanksgiving to one and all. I'm creating this video for the purpose of education and for those that want to understand how to catch these parabolic trades like what we saw in the crypto space yesterday and across various asset classes, in fact, including the indices. But let's be specific to the crypto market in this video. I've seen a fair bit of commentary after the fact, and no one really addressing actually how to have caught the moves, merely what to do next. What I want to do is point out that the markets do one of three things, and by nature of being game theory, the market traps, consolidates, and moves. They break out and then they pull back and either continue or fail. So once we get to understand the way in which markets move, yes, conditions change, but they morph from one condition to the next. And you can, in fact, participate in all conditions, whether they're breaking out and continuing, breaking out, reversing, or in a phase of consolidation. There is always going to be an opportunity, especially when you're looking at a variety of assets within your watch list. So the myth that you need a strategy for various different market conditions, well, not necessarily. You can have the same multi-time frame approach, monitoring for traps, the consolidation, and the inevitable parabolic breakout for which we are hunting each and every day when we come to our screens. So let's get into Ethereum first of all, and I'll do another video for Bitcoin and then another video for the indexes. Now, full disclosure, I did not partake in this trade in Ethereum, not that I wasn't monitoring for it, and not that I'm not kicking myself for not tweaking my rules to some extent. So stick around to find out what exactly I'm going on about in that respect. But let's look at the market from a top-down perspective, first of all, how we derive at our bias, and then what we can do about that during our trading session. Now, I trade the Wall Street Open. This approach can be used certainly for London, and I'm yet to really go full in on Asia. But I'm not here to try and trade every market, every move, every single day. I am carving out my edge in the Wall Street session, but this can be applied certainly to the London session as well. Now, we're looking at a split screen here. On the left-hand side, we've got a market profile template. On the right-hand side, we've got the Trend Predator Trading Tools template. On the right-hand side, first thing that I'll do each and every day is monitor the structure of the market from a top-down scenario, and I use the Trend Predator Fake Out tool indicator, free indicator, by the way. If you want to reach out to me, mention in the comments and I'll ensure that you're able to get hold of this indicator. What we're looking at here are multi-colored bars, monthly bars. And this is a makeup as to how I've decided to color code my bars. But we're looking at breakout bars, breakdown bars, switch bars, and fake out and inside outside bars. Okay, so this is going to help me determine where the flow of the market is. Importantly, who is trapped from a top down perspective. We're starting at the monthly chart. So as you can see here, we broke up on in July, and we broke out of the trap from down low. We broke up again, we consolidated inside month, we took out the highs of the inside month liquidity that fueled the surge to break below that breakout level. So that now is our switch level on a monthly chart. So we've switched the flow, bearish. There's an inevitable continuation following that switch bar. Okay? Now, we would assume, therefore, that we're looking for continuation trades on a daily basis throughout this monthly bar. That's not to say that we can't trade against the flow, but we'll be best positioned trading the continuation. On a weekly basis, we do the same process. We're looking for the switch. So here we have trap volume up top. We've already established that on the monthly chart. There's our switch on the weekly chart, and there's our inevitable continuation of flow week after week, thereabouts. Okay. Now, when was the last time the market broke down and closed in breakout? Over here. So we broke that inside week low. Fantastic. Okay, so we are trading with the trend the following week. Now, what we'll notice is that since that inside week bar was formed, there has not been a retest of the liquidity upstairs above it. So just worth paying attention to that when we start to build our thesis, if there are indeed signs of a reversal into the downtrend. That could be a magnet for the price to be attracted to into liquidity eventually. So just keep that in mind. Okay, so we've got our weekly switch bar marked off. What we have now. Okay, excellent. All right, so now we're moving to the days. Let's do the same process. We're looking at the days. Here's Friday, last week, and then Monday, switch bar. Why is that a switch bar? Because it's changing the flow of direction. Okay, this was the last time the price broke down, closed in breakdown, and then on Monday, we continued up following the engagement of buyers. Okay, so on a 3-day cycle, we've got day one in the market, confirmed by day two breaking up. Okay, so we've got our switch bar, switch level marked off here. Okay, so we're now trading in the confines of this weekly switch level and this daily switch level. So when we come into our trading day yesterday, we had an inside day, Tuesday closing, and we are therefore, let's go into a 4-hour chart to monitor this. We are therefore of the mind that there will be liquidity below, stops, orders, etc., and above. And our thesis, when we come in the next day, is that we are in a bullish reversal play because we've got trap traders confirmed by Monday breaking up, breaking the highs even of Friday. So that can also be regarded as a switch level. And the flow is bullish. Therefore, when we come in on Tuesday as being an inside day, we're somewhat biased bullish. There's no reason to be shorting, but it closes an inside day. Okay? And then we move over to the next day in a bullish environment, and we're of the mind that there's liquidity above the high and the low of the inside day. Sorry, that inside day is over here. I'm putting it over there. The inside day is over here. And there's a few things that could happen. Now, we're not trying to guess what is going to happen. We're not trading our judgment. We're trading the price action at the levels and determining a thesis depending on the outcome of the price action at the levels. So we can assume that the price will take liquidity up high. Okay, so we would assume, due to this trap volume and this breakout, that the bias is bullish for liquidity, and we will monitor the price at the high ball liquidity. Now, the price could well continue from there, or it could reverse. And if it reverses, which it starts to do in Asia, then we are of the mind that there is liquidity down here for the price to go and grab, potentially before the next move out, away from this peak formation low, the trap volume that was trapped on the Monday, consolidating on the Tuesday, further consolidation on Wednesday, and potentially on Thursday continuing higher. Or, I mean, who's to say that it can't come down low? Unlikely. Come down all on the same day, take liquidity, and then rally back out. Don't think I've seen that too often, but never say never. Now, like I said, I'm not here to guess what the market's going to do. I'm going to trade what I see. So as the day unfolds, as I said, I am a trader, a New York trader. So I'm looking for the market to set up into my trading window, which is 10 a.m. And that allows for the market to do what it wants to do, whatever that is, all the way in through London, having come out of Asia, and into the Wall Street Open. Now, the Wall Street Open is often a trap both ways. And as you can see, we've got a market that's come down 3 times, 1, 2, 3, and then rallied hard away from that switch level, from that firm breakout level that's been acting as support. I mean, a little bit of give here, but we can regard that as a potential formidable support area. And we can build a thesis once we can have a thesis into the trading window, but we need it confirmed by the price action. And here we're starting to get confirmation, aren't we, that this is indeed a support area, that the market could well be bullish still, regardless of the drop on the day. We could still engage buyers looking for a cheaper price. All right. And there we have it. Now, at this stage, we can also be looking at our market profile chart. So the market profile at that point of the day, coming into our Wall Street Open, shows us that buyers are still willing to buy relatively high compared, certainly down here, okay, and that the price is assumed by us as being a fair value price so long as it stays within the realms of the value area low and the profile from the prior day. So that's the fair value of the market on the inside day. And we've popped up to say hello to the highs of that inside day. We had a little fake out high, but this is where I'm kicking myself not to have tweaked my rules a little bit, because indeed there wasn't exactly much liquidity taken from here. It barely clipped the highs of the inside day at this point. Okay, and then we came down, and then we respected that switch level as well as the fair value low of the prior day. Okay, now at this point then, if the price isn't being accepted below it, or not falling away, I should say, it's being turned away by the value area low, then we can be looking for the inside day lows, as I mentioned earlier. But we didn't get that. And we're well into our New York session here, and we're now coming into the Wall Street Open. And as we come into the Wall Street Open, we're monitoring the behavior of price. We're monitoring the behavior of the price, and as you can see, let's get the trend predator. Sorry, I'm on the wrong chart. So as you can see here, we're remaining within the value area from not only the current date but the prior day, and now we're starting to move out of the point of control. So all of this is looking really rather bullish for a parabolic explosive move out of the consolidation. So trap traders, breakout, inside day, liquidity taken up, but not very much, up high of the inside day. There's always prospects of coming down, but we need the price action to show us its hand. And what it's telling us is that it's not coming down. It's accumulating. I mean, if you're a Wyckoff fan, you could regard that as a spring, but it's clearly accumulating following 3 levels of drop into the Wall Street open. And as you can see here, the price is forming a base. We've got this beautiful W formation. Okay, quite often you'll see a retest of the neckline, higher buyers committing to the price, willing to pay higher prices. Move along a little bit, and off she goes, just as anticipated. Okay, and we are trading a set up at that point. That is a bullish setup. And what are we targeting? Well, we know that we're targeting that weekly switch level. And it took until Asia of today to get up there, and a very nice rejection away from that. So a fantastic target, brilliant trade setup, very well worked out textbook scenario. Trap traders breaking out away from the trap traders, pulling back inside of the rally, picking up liquidity, consolidating, coiling, barroom brawl between buyers and sellers, getting held up at that switch level on a correction, 3 levels of drop into the corrective level, the breakout level, and then the inevitable parabolic breakout once the liquidity has been picked up to fuel the move. So let's go over to the chart for which you would have traded this on. And here we have the, let's get rid of all the levels. You can remember where they are. So here you have it. There's the Wall Street Open. There's the W formation within that open. There's the breakout, the pullback, and then the parabolic thrust out. Now, we did get a fake out high over here. So I was being overly cautious, I would say. It's not very much liquidity that's picked up, is it? Above the inside day highs. So I should have actually taken that. I was waiting for the breakout. And again, my bad. Well, I don't know if I can say that. I mean, I've got rules, but what I wanted to see here at the level was some bullish structure. So a fake out low on the 5-minute, 15-minute, but I mean, in hindsight, we sort of had it over here and then the thrust. But I did want to see a change of hands, some rotation, confirming the continuation, because that could have quite easily trapped us again and come down for the stops below. But in hindsight, we've got a beautiful 3-day setup. Friday, day 1, longs, day 2, longs on Monday, consolidating, and then the 3rd day of longs coming in a beautiful 3-day setup. So I hope that was of interest and educational. If you want to reach out to me, go ahead, be my guest, and I'll be delighted to break this down further if need be, if any questions. And the next video I'll do will be on the Bitcoin. We saw a very similar outcome with Bitcoin. It's the talk of the market at the moment. Cryptos, the explosiveness that we got yesterday. Happy Thanksgiving to all. Cheers.